So, Oscar, just start with a brief report card, an update on where we are in Brazil, because after the election of Mr. Bolsonaro, there was high hopes, but we really didn't know that much about what was going to happen. How far along are we? Do we have a better sense today of whether they'll be able to deliver?
Sure. First of all, thank you very much for having me here. I think we're in about 40 days of this new government. What we've seen so far is really the planning out of the cleaning out of the house. And what we've seen is this new Social Security reform going back and forth along the economists, along the Bolsonaro government. But what we've seen is very positive news in regards to what we've seen from this specific Social Security reform. We've seen a lot of positive with the Senate and Congress, new presidents. That was something that was bringing volatility to the market a couple of weeks ago. And then we saw is two new presidents there together with the government to make this reform pass.
So does he have the support of the legislature that he needs to get this done, and for that matter, of the people? Because he's seen reforms in other countries that run up against that.
I think it's a great point. I think on the people side, this is a new president that's showing kind of dedication. He's in the hospital and still working a lot. We're seeing every single day a post from him discussing about a special important point for the government, and I think population is definitely behind him. On the government side, on Congress and Senate, there's a general support for this program, but there's specific discussions about concessions here and there. But we're very positive still with the scenario of what's going to happen this February now.
And then I'm wondering, Damian, though, we brought up Vale and sort of the rent that could throw into it, because it's all going to deal with how you get rid of mining waste, the toxic mining waste. And now we're going to see maybe, is there regulation needing for more transparency through companies? Does that throw a wrinkle into this?
Well, I mean, Vale has relatively sustainable free cash flow, right? $7 billion per annum is its run rate. So I think it's going to be fine in the long term. I don't think that's a real issue. I think the real issue for Brazil is that number you talked to me about, FDI. I mean, that's a big number. And relative to last year at this time, Brazil doesn't carry nearly as well from the perspective of a U.S. dollar creditor as it once did. So, you know, how's it going to attract that inflow? I mean, I'm sort of in the air about whether or not it's going to be successful in its, well, whether or not Bolsonaro is going to be successful in that.
I think time will tell us. I think what we have to always judge is just upon what things are actually happening. What things are actually happening are positive steps. You get Congress support, you get Senate support, you get new Congress president, new Senate president. I think on the regulation point, just to touch a little bit on that, the free market position that the Bolsonaro government is bringing to it is a reality. However, there were certain laws that were not being executed in the past. So what we've seen with this Vale Dam issue is that the laws are now being executed. So the reaction that the government had on top of this specific dam has been much, much bigger than what happened in the last dam rampage. Unfortunately,
it's only 2015, right? So it's not like that was like 20 years ago.
Yeah. But at the same time, you have some laws you need to have executed. Maybe you have some you don't need to have executed. I mean, when I've talked to businessmen before investing in Brazil, they say the climate is so difficult, the bureaucracy is so intense, the permitting process is so difficult that it discourages foreign direct investment.
Oh, for sure. When you look in regards to the list of the countries of doing business, Brazil's what, 130th, 128th? It's like as close as Sudan. But when we look in terms of the perspectives, as I showed you, this Pricewaterhouse report, showing that Brazil is going to be the 5th largest country in 2050, something needs to change dramatically because the opportunity set is there. When we look in regards to this amount of money that's going to come in these years to come, is also relative to the under-allocation that we went through in these last 10 years. So global funds have very little exposure. Everybody's kind of still under-allocated to Latin America in general and to Brazil specifically.
I think fundamentally, though, what we have to look at, right, is PMIs are running hot. I agree with you. But that IP print back in December was pretty weak, and if that bodes for FY19, I mean, we're going to have some weak growth, and if you have growth sub 3% in Brazil, yet you have inflation running close to 4%, it's kind of a bad cocktail.
But if you're an investor and you're looking at Latin America in general, where else would you go?
Oh, that's a good question. I mean, I like the Andean region a lot, and I like it because it's just fundamentally cheap. If you do expect negotiations to go well between the U.S. and China, I mean, copper producers like Chile and Peru should do actually pretty well, at least the currency should. Mexico still has its own issues, for sure. AMLO is definitely butting some heads over there. But yeah, no, I mean, look, Brazil, I mean, I agree with what you're saying. Structural reform, though, is key, and the timeline is key. and the verdict is still out whether or not he's going to be successful there.
Yeah, look, I think at the end of the day, it's all about the fundamentals. You have to look under the ground. You have to really find these opportunities which are dependent on the size of the government, the size of these expenditures on the Social Security reform that needs to be addressed. If they're able to do that with a stronger government of showing kind of new laws and new positions, which are what they're exactly trying to do right now, I think we'll do fine.
You said that he has the public support he needs right now. There's a tendency for that public support to wander away if you don't deliver. How much time does he have?
I think the longer it takes to get the approval, the more this specific Social Security impact will have on elections 4 years down the road. So I think everybody elected wants to get this done as soon as possible so that this doesn't affect in a negative way their attempt on next elections on that.
To be fair, he is in the hospital, so maybe there's
yes,
still a teeny bit of leeway with that. But what I find interesting about the conversation, too, is that you're talking for two different kinds of investor bases. I mean, you're a private equity shop that does small, mid-sized small deals that's based on the consumer and based on domestic conditions
local
changing.
Stories,
yeah, local stories, whereas you're looking at it from sort of a U.S. investor where you want to allocate point of view. Can these two continue to be separate?
No, I think it's a point of segregation in regards to asset class, public equities, private equity. From the investor standpoint, we are also focused on U.S. denominated investors. And I think that at the end of the day is the timeline that you're looking for. Volatility is a reality this year globally. In Latin America, it's not going to be different than that. So you need to be able to invest into something that has a longer time horizon in order to generate that return that will kind of justify the risk that you're taking.
One small name we're not mentioning is Petrobras, and Petrobras.
Oh, right, there's that.
I mean, I just have to say they are in a bit of a sweet spot right now with their pre-salt. I mean, basically they have heavy sweet crude, and with IMO 2020 coming on, I mean, Alex, you know all about this. I mean, they're in a very, very good position over the medium to long term. So. And they're a big issuer of dollar debt as well. So, from a creditor perspective here in the U.S., that's not a bad way to.
Just to break that down, it basically means the crude that they're producing in the pre-salt is exactly what we're going to need when we have to make certain products for January 2020. That was that whole thing. And Exxon sort of really betting big on that too.